And the question in my mind is, even with all this hope and optimism behind the incoming Trump administration, is there anything they can do to avoid a liquidity crisis?
The short answer is no. What's impossible to predict is when and where. What's possible to predict is the inevitability if you are taking dollars out of the system and putting them into a black hole. Trump has talked about how our country's going bankrupt, so he's very conscious of the debt. But when I think about that relative to what the Trump administration can do on the margin, it pales in comparison to what the Fed's doing. Everyone has to mentally prepare. What happens between here and 12 months from now might be particularly volatile.
Be prepared, freaks.
Up and down.
How's CrossFit been?
First rip of 2025, I'm starting there. It's been good. Can't believe you haven't made it into the gym.
You know I don't.
I'm so
go.
disappointed.
I can't do the high cardio stuff. I puke. I went once.
You came once. You almost threw up after a 500 meter row. You did.
I did throw up.
But if Larry Lepard can do it, and he's pushing 60, you can get in the gym.
I get in the gym. I was telling you I was at the gym right before Rabbit Hole Recap today. I get to the gym. CrossFit is not my thing.
Gym tan laundry culture.
Yeah. It's hard for me to tan though. Light skin Irish
Is it North Jersey or South Jersey? South Jersey.
Yeah.
I get confused.
Most beautiful beaches in the world. I will put my flag down and state that authoritatively. The sand. No better sand in the world than South Jersey. You heard it here first, Cape May County.
Interesting. But yeah, it's good. We've got, Bitcoiners going twice a week, a little crew there. So we need you to be a part of it.
Yeah, it's just a terrible time too.
No, it's a perfect time.
8:30. That's right when I have to get the kids to school.
Well, we actually timed it so that people could get their kids to school and then come. So your kids go to school late, I think.
They do.
What are they doing?
They do. You're not allowed to drop them off before 8:30.
Oh, yeah. I think
you get yelled at.
Will's kids get dropped off at like 7:30 or 7:45.
Yeah.
So 7:30 would have been, we got to create something that works for everybody.
Yeah. It doesn't work for me.
Take your kids to different schools.
I got kicked out of the CrossFit group chat. Justin. I saw that. Is he making fun of me now?
Yeah. Every time.
Okay. Yeah. We're not here to talk about CrossFit. I'm about to take a trip. Tomorrow, it's the beginning of 2025, January 2nd, sitting down to record. This will probably be out next week, but wanted to do a catch up with you. First rip of the year, first recording.
Good way to start the year.
Great way to start the year. We have Mayor Parker Lewis. And a question that's been eating at my mind is a lot of hope and optimism for this incoming Trump administration from an economic policy perspective, but the string of our conversations dating back 6 years now, I think, technically, maybe even longer, 7 years. 2018, I think, was our first rip. Has been, there's too much debt, not enough dollars. Everybody's very bulled up on Trump's economic plan, combination of tariffs, lower income taxes, the Department of Government Efficiency coming in. But as I was explaining to you right before we hit record, we just talked about it on Rabbit Hole Recap. We're seeing delinquency rates for commercial mortgage-backed securities reach highs not seen since post-08. You're seeing credit card delinquency rates approach pre-2008 levels. We've obviously got this massive debt crisis that seems to be ballooning out of control. On top of that, you have the Fed having cut rates by 100 basis points in September, and the 10-year Treasury has not acted the way it historically has when the Fed cuts rates, and is perfectly inversely correlated with the Fed rate cuts. Yields gone up. It means people aren't very optimistic about the Fed being able to control inflation and the prospects for the U.S. economy over the next 10 years. And the question in my mind is, even with all this hope and optimism behind the incoming Trump administration, is there anything they can do to avoid a liquidity crisis?
The short answer is no. I think there's nothing that they can do to avoid a liquidity crisis, or the only thing that can prevent a liquidity crisis at this point is the Federal Reserve preemptively creating a lot more base money and taking various measures to put those dollars into places that help prevent a liquidity crisis. And that everything that happens on the fiscal side from the Trump administration or the outgoing Biden administration and the respective Treasury departments, in my view, sits at a kind of at a level that is secondary to what the Fed does. And so I think that there's always a argument for better economic policy than worse. So anything that the Trump administration can do to promote a more sound, stable economic environment with the United States is a positive and should certainly be pursued, but I view it as marginal to the 800-pound gorilla, which is the Fed and its monetary policy. So to kind of just catch everybody up in terms of like where we're at right now in terms of the Fed and the money printing and the debt creation, I always like to just kind of set people of kind of what's been happening in recent past, but then in the broader context. So about, say, in the end of 2007, there was about $53 trillion of dollar-denominated debt in the U.S. system-wide. That's pre-crisis, and at that point, there was only $900 billion in all of existence. That's base money. So approximately 50 to 1, but of that 900 billion, only 350 to 400 billion was actually in the banks, and the banks are the source of leverage, and I think of that money as what's available to the banking system. And so the banking system could be thought of pre-financial crisis 2008 being leveraged 150 to 1. So the financial crisis happens, the Federal Reserve increases the supply of base money by 3.6 trillion over 3 series of QE to take their balance sheet from approximately 900 billion to 4.5 trillion. They subsequently, over the period from 2007 to 2019, started taking certain of those reserves out. I believe it was somewhere between 7 to 800 billion, but it squeezed the banks a lot more because it's coming dollar for dollar out of the banks, and not all of those reserves that the Fed has made available are sitting in the banks. So they ended up taking out like 33% of the liquidity from the banks. And then in September of 2019, there was the repo market crisis where interest rates in that overnight lending market went from 2 to 3% to 10%. And that was really before COVID, the inception of the wave of money printing that happened between 2020 and 2022. Like the tail end of 2019, where the Federal Reserve then created $5 trillion through the course of the COVID lockdown. But really, that liquidity crisis had started before COVID. So the Federal Reserve went from somewhere around $4 trillion in reserves to post-COVID, post-money printing to about $9 trillion. Then in the spring of 2023, the wave of bank crises happened. Silicon Valley Bank failed, First Republic failed, Signature, Silvergate for different reasons, but the Fed then put in their BTFP program to basically lend at par, even if
your treasuries were underwater. And they began at that point to put a little bit more money back in the system. But since then, since they quelled that series of bank runs where everyone was fearful that if you weren't in JP Morgan or Citibank or Wells Fargo that your bank was going out of business, once they quelled that, they then began taking money out of the system again. So from the post-COVID peak of money printing when there was approximately 9 trillion in reserves, there are approximately today 7 trillion. So they've taken out $2 trillion from the system from 2022 to today. At that same time where the U.S. system stands in total, the reason why they have to put the money in is to quell the liquidity crisis, which is a credit crisis. Whereas they take the dollars out,
there become fewer dollars relative to the same amount of debt, and then everyone figures it out and they start heading for the exits, it's essentially re-leveraging the system. So if QE is designed to work by first quelling a liquidity crisis and credit crisis by providing more liquidity, it's also designed to actually induce the expansion of credit. And so where the system sits today is at 101.5 trillion based on a report that the Fed just put out in the last month as of the end of the third quarter. So that's system-wide, federal, state, local, corporate debt, financial, non-financial, consumer debt, auto loans, mortgages, student loans, credit card debt. All of that is 101.5 trillion. So when you think about that in context of pre-financial crisis, we started with this credit problem, this credit crisis, too much debt, not enough dollars, of 52 trillion. Now that system is nearly doubled in size, and it doubles. It is induced by the creation of money. So 101.5 trillion of debt stacked against 7 trillion actual dollars as base money. And functionally what happens is the Fed goes from 9 trillion to 7 trillion. The amount of debt doesn't go away. The debt's continuing to expand. The federal government's running $2 trillion deficits plus. That as they take the base money out, that 9 trillion going to 7 trillion, there's fewer dollars that are being competed for, not just by the debt that exists, but everyone in the economy. But if you think about it simplistically of debt to dollars, it's functionally re-leveraging the system. And 100 divided by 9 versus 100 divided by 7 is a significant difference. It's a significant re-leveraging of the system. So basically, when we think about whether it's credit card delinquencies or commercial loan delinquencies or the 10-year going up when they're lowering short-term rates, the way that I think about it is the only thing that can influence the supply side of dollar interest rates is the supply of dollars, and the Fed controls that. So while they may be, quote, reducing the short end of the curve, like the overnight borrowing rates, they're still taking money out of the system. Like, I haven't looked in the last week, but up until this last month, reserves provided by the Fed were continuing to decline. That more than anything is driving interest rates higher across the board because there are fewer dollars competing for more and more debt that exists, and the competition for those dollars becomes zero sum, which influences interest rates. So when I think about that relative to what the Trump administration can do on the margin, it pales in comparison to what the Fed's doing. And I don't personally believe that the Fed understands the cause and effect of its actions. It's not trying to create an all-out liquidity crisis. It's looking at inflation and all of these different metrics and probably not focusing as much as it should on the re-leveraging of the financial system and the liquidity crisis that it's inevitably going to cause, that's going to induce the need to print massive amounts of money to quell a credit collapse.
Yeah. So it went from, I guess, 11 to 1 leverage around 15 now.
Yeah, which is significant, yeah. But it's that 2 trillion of base money that 2 years ago was available and sloshing around, and it's impossible to know what that tipping point is, right? It was impossible to know in 2019 what the tipping point would be for the repo market. But then it shows up overnight and everything changes. What's impossible to predict is when and where. What's possible to predict is the inevitability of there being a liquidity crisis if you are taking dollars out of the system and putting them into a black hole while this metastasized credit system remains there and ever growing.
Yeah. Hard to predict the when. Pretty certain that the if is going to happen.
So certain. It's not an if. It's a certainty. Yeah. It's a mathematical dilemma, and that I was when I say that it's difficult to predict when or where. I mean that in the 2008 financial crisis, first it was subprime, but then it expanded out. It was commercial paper. It was everything, kind of, it snowballed and became a waterfall effect. And then in 2019, it was the repo market. So, it's like if they had a problem with mortgages in 2008, and then one of the primary instruments that they purchased between 2009 and 2014, their first QE1, 2, and 3, were mortgages, certainly they were going to have their eye on the mortgage market and making sure that if something was becoming dysfunctional in the mortgage lending market, that they would have their eye on that ball. In 2019, they were probably still looking at the mortgage market and seeing that things were normal in the mortgage market, and then completely caught off guard when the repo market broke.
In 2023, not recognizing that their interest rate policy was affecting the reserves of the banks with the treasuries. That
it basically induced bank runs.
Yeah.
That as banks had to sell assets to meet withdrawing deposits, that they were having to realize these massive losses that the Fed itself had created by rapidly increasing interest rates.
Yeah. That's just Frankenstein.
So when I say it's impossible to know where, it's like there's somewhere in the credit system where like maybe they're focused on the commercial loan market and they have a plan because they're seeing this stress, but there are functionally cracks everywhere because every dollar of credit is competing for the reserves of dollars. And so it becomes zero sum. They're taking dollars out of the system, and then the market generally, each individual market as well as the market in totality, have higher interest rates because there's fewer dollars that are there to be able to lend. And which critical functioning market totally breaks first is impossible because it's a function of the market. It's a function. I believe in 2019, what induced that, or at least it was rumored, was that JP Morgan pulled from the repo market.
Went into cash.
And maybe the Fed didn't know that, or maybe they weren't, coordinating that with the Fed. And so because it's market driven, somebody's supplying funding to roll over commercial loans. Say there's a big player and they decide, nope, no longer doing this, then that market breaks.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20. Sup, freaks? This is a read you don't want to skip. Everyone knows about Fold. You know about Fold. It's the app where you can earn the most Bitcoin rewards for everyday purchases. But here's the kicker. Fold now lets you double stack rewards with gift cards. Use your credit or debit card to buy gift cards and earn both credit card rewards and sats. From groceries at Instacart or Kroger to home upgrades at Lowe's or Home Depot. Maybe you want to get takeout. You like Uber Eats and DoorDash. Maybe you want to go on a trip. You're using Airbnb or Southwest and everything else on Amazon. Fold gift cards help you grow your stack with every purchase. If you're not shopping with Fold gift cards, you're leaving sats on the table. It's as simple as that. Don't leave sats on the table. Go sign up for the Fold app. New users get a 20,000 sat welcome bonus with their first gift card purchase. Don't leave sats on the table. I'm going to stress that. Go sign up now at foldapp.com/Marty. Well, that's another interesting. You brought up rollovers too. I imagine the Fed's got to be shitting their pants right now, and the Treasury, because they've cut rates by 100 bips, and the 10 years moved in completely inversely to those moves. It's up 100 bips while the Fed funds rate is down 100 bips, and we have a lot of debt to roll over next year. trillion. I think one of the numbers I saw out of the 37 trillion that we've already amassed, I think something like 3 to 5 needs to be rolled over, maybe even 7 next year.
And the question is, I mean, my understanding, I haven't been following this like a hawk as some others might, day to day. I follow it kind of in the aggregate level, is borrowing shorter terms, issuing T-bills rather than longer term treasuries. But somebody has to hold all that debt, right? That 36 trillion that exists, just the federal government, that 36 trillion is part of that 101.5 trillion in terms of the total system. And, understanding that there's this difference between the Fed dictating the reduction of short-term interest rates versus the market and the market's willingness to buy and hold longer-term credit. And longer-term credit is how everything about the system is funded. Like if you think about, some people have revolvers and credit cards that could be pulled in a month, but if there's a business issuing commercial paper, it might be 30 days. Or if if Apple's issuing debt, it's a multi-year, bond, 5-year bonds, 7-year bonds. If someone's buying a mortgage or taking a mortgage, it's typically 30 years. So no one generally, if they're relying on credit to fund their business, is doing it in a way that is on an overnight basis. Like no one, no corporate credit is going to say, well, I'm planning my finances with this debt, but this debt might not be there tomorrow. Most funding of individual balance sheets, corporate balance sheets, and government balance sheets is term debt. And the reason for that is you want to know for an extended period of time that, okay, I've taken this money, I've borrowed it, when am I going to have to pay it back? Obviously, the federal government is, quote, unique in the sense that it's so intertwined with the Fed that it can functionally rely on the Fed printing money to not only directly purchase its debt, but to fund the market with incremental dollars to be able to purchase it. But that is a constant source of tension where, in this case where you highlight the fact that the 10-year has gone up and the federal funds rate has gone down, it's because that 10-year is actually competing for term financing in the market. It's like someone has to be willing to hold it for a duration, in this case, a 10-year duration. And they're looking at things like interest rates, but also, well, what other assets can I hold? And, is it worth taking, a 4.5% or 5% return when I could own Bitcoin, like that becomes an
opportunity cost.
An opportunity cost. And when real inflation is, 5 to 10% or worse, probably, then you're really just holding nothing.
Yeah. No, and I think, you wrote gradually then suddenly, and you don't know the when. And I've probably said this before in the past, so take it with a grain of salt, but particularly like with the debt rollover and the 10-year, not playing game with the Fed funds rate, we surpassed $1 trillion in interest expense on the debt this year. If they have to roll over 5 to 7 next year at these interest rates, you can see it easily blowing above $1.5 trillion. And then to your point about bondholders, whether it's public debt or corporate debt or whatever it may be, having to weigh the opportunity costs, like how much of the decisions they're making on an ongoing basis as we head into as we veer into 2025 is like, can I actually trust that I'm going to get paid back in 10 years on this government debt? Like, look at the state of the fiscal side of the U.S. economy and how much they've expanded the debt in recent years. And even if they wanted to get very fiscally responsible, bring in DOGE to cut things, like they already amassed too much where it's a runaway problem.
Yes, it's a runaway problem. I don't I think that the goals of DOGE are great.
Virtuous, but
Virtuous. I think that there's a really nasty game of politics that will stand in the way, right? But then, even if it didn't, the way the Fed system works is built on credit. And there's basically, if you looked at the expansion of credit over the course of the last 16 years since the financial crisis, the expansion of the public debt has accounted for, of that 50 trillion, at least 50%. I can't remember what the federal debt was in 2007.
I think it was around 20.
No, it had to be lower than that.
12. I was going to say 21. It was
Maybe.
12.
Yeah, so if it's now, say if it was 12, if it was 36 now, then that would be 24 trillion of expansion. I know it was 4 trillion when I was in high school, which would have been...
Don't age yourself.
2002. So can you see, Logan, can you see what the federal debt was in 2007?
Just Google St. Louis Fred federal debt.
And it's approximately 50%. So the point I'm getting at is that if the federal government debt were not expanding, like that's what's creating this overall credit expansion, which is part of what the Fed needs to, it needs the total credit system to be growing. If it's not growing, it starts to collapse on itself. And so if there's this kind of catch-22 where if the amount of debt that the federal government, not the Fed, was creating suddenly like started to contract, well, that money's going to somebody. It's getting out there into the economy. So that itself, I don't think that they're going to be able to do it, but like it's damned if you do, damned if you don't. Like the system is so imbalanced and broken that if what's most likely to happen, or what's a certainty to happen, is they're going to print money. But in this kind of scenario, the Fed's going to have to step in to buy the government bonds.
They're going to have to monetize the debt?
To control the interest rates. And that when you think about, well, should I hold a government piece of paper for 10 years that not only has interest rate risk, but has market risk, right? Because if you look at the actual mark-to-market value of the 10-year or the 30-year over the last 3 or 4 years, there's massive mark-to-market losses. Everyone has always, in my lifetime, which now that I'm getting a little bit older, it's starting to be multiple cycles, but there was always the idea of the Fed put. And then Jerome Powell and the Fed tried to, really, quote, get out of it. And they raised interest rates fast and they left them high for an extended period of time. And the idea that the Fed put is there is no longer assumed as religion.
It's dubious.
Everyone knows that they're going to have to come in and buy bonds. But the individual investor's mindset of there's a bunch of people that just got burned, myself included. Am I going to be the one to take this gamble, or should I just buy Bitcoin? Because that increasingly becomes the opportunity cost. I can opt out of this. I know they're going to have to print money. I can, even if you're considering it a trade, which I don't consider it a trade, even if you're going to approach it as a trade, so are you going to trade the Fed and have to worry about whether it does something unpredictable like it did massively increasing interest rates, or can I play that same trade and just buy Bitcoin? Because if you're viewing it as a bet that the Fed prints money, you can just take the time and uncertainty of what the Fed does and when out of the equation. Because anyone who's buying treasuries as a financial participant right now is doing so with the idea, well, the Fed's going to have to come in and buy these and they're going to increase in value and the dollar's not going to lose its value as fast as the amount of money I'm going to be able to make on my mark-to-market gains. So therefore, I'm gonna gamble on what and when the Fed steps in to have to buy all these treasuries. And so just owning Bitcoin is a less risky proposition than trying to time the Fed.
This rip was also brought to you by our good friends at Salt of the Earth. You got to be hydrating, freaks. And while you're hydrating, you got to be getting your electrolytes. This is the best electrolytes mix that I've ever come into contact with. Pink Himalayan salt with calcium, magnesium, potassium, sodium, no sugar. It tastes incredible. My favorite is the orange in the pink lemonade. Go to drinksote.com. That's drinksote.com. Use the code TFTC when you make your purchase, and you'll get 15% off. I'm telling you, get on it, freaks. You're going to love this stuff. And with that in mind, do you think, obviously, Trump had been coming in, campaign on a strategic reserve. Many would argue that was simple political pandering to a base in a period when you're trying to amass votes. Do you think they recognize this, though? And that's why, part of the reason why the strategic reserve is part of this platform, the Trump platform, is the recognition of this? Because that's the other thing. Like, it is somewhat of a catch-22 for the federal government, the Treasury specifically. They can't overtly come out to the market and say, we're going to start diversifying some of our Treasury assets into Bitcoin, because we don't know what the stability of the U.S. Treasury bond market's going to be like in the long term. But is there some...
I don't know. From hearing Trump speak at the Bitcoin conference, I'd say it was 90-10 that he doesn't there were certain things that he said that indicated, oh, maybe he gets some of this. And he's certainly shifted significantly from where he was 5 or 6 years ago. So he's no longer dismissive of Bitcoin. In 2018, 2019, he was dismissive of Bitcoin. No, it's not money. It's too volatile.
It competes with the dollar.
Yeah.
The dollar strength.
Yeah. To 2024, and he's appealing to a base, but he's saying other things like, I want every Bitcoin to be made in America, and, I understand that this requires a lot of power. We want to make cheap power. So there's things that he's shifted on that signal there has been some positive progression of his understanding of Bitcoin. But then when he says, have fun playing with your Bitcoins and everything else, you have to accept that there's a missing link where he's not really seeing the clear picture. I think what's more likely is that he likes winning, and Bitcoiners win.
Yes, we do.
We keep winning. We never get tired of winning. He respects winners. He respects people that are fighters. Bitcoin goes down and then it doesn't die, and everyone's still out there saying you need to be saving in Bitcoin. And I think he wants to win. I think he understands enough of it to know that there might be something here. We can't afford to not be there. So I think that while it's not well reasoned and well strategically thought out, he has at least said something along the lines of, like, maybe we'll use this Bitcoin to pay off our debt. I don't think he's, Machiavelli thinking about how he's going to, buy a bunch of Bitcoin and then shift the world to a Bitcoin standard just yet. But I think he knows that it's something of substance, and it's a base of people he needs to appeal to, and that the U.S. can't afford to not be there. And so, in my view, I think there's this important detachment between the U.S. dollar, the Federal Reserve, the federal government, and U.S. treasuries, and what's in the interest of the U.S. government and the U.S. people and the American people versus what's in the interest of the Fed and the Federal Reserve. And it's a very messy situation where the federal government relies on the Fed to finance it, and so they're very much in bed with each other. but their interests are actually distinct. So if you looked at a scenario where El Salvador has been buying Bitcoin, it has dollar-denominated bonds, and the actual owning of those Bitcoin is improving the credit profile of the government. Now, there's a lot of socioeconomic investment and governance that's changing to also make it a better credit, but it has this Bitcoin, and those Bitcoin can become part of the collateral that you might need to get your loans repaid. The same can exist with U.S. Treasuries, but you either, they just either convert the 200,000 that they own to a strategic reserve, and there's a question as to whether they really have clear claim on all 200,000, because I think like 100,000 of them are Bitfinexes. But regardless, there's a difference between basically shifting what they currently hold into a permanent reserve and actually buying it, because how do you buy it? You either have to issue debt
or use some revenues from government operations,
or maybe take tariffs. But, somewhere, there's a dollar of debt that either is growing or, being repaid. And so you're using those dollars to buy Bitcoin rather than either repay debt or cause the debt to expand faster. So I think that, one of the things that was part of the fight in Congress was extending the debt ceiling. I don't think that, from what I've seen, it doesn't seem like a high priority in the short term, at least, to cut spending to bring the debt to zero. I think Trump has talked about how, our country's going bankrupt, so he's very conscious of the debt, but I don't see it, a shift in administration and then suddenly the proclivity of Congress and the president to get together to spend as much as the government's taking in will change.
So is the idea of issuing treasury debts and taking, say, 10% of the proceeds to buy Bitcoin to hold within the bond. Does that make sense to you? Would that be
I think it makes sense for everybody, but the calculus has to be different for the U.S. government because of the U.S. dollar. Now, in my view, the U.S. dollar and the interests of the U.S. dollar and the Federal Reserve are distinct from that of the government, while also accepting and recognizing that one funds the other. That if you were going to shift to, we're going to start holding Bitcoin and we're going to use we're either going to use dollars to buy them or just not sell what we hold, that there's a consequence to the dollar status if the U.S. government is doing that. So anybody else that has dollar-denominated assets, if they could do that and they're comfortable with the leverage and the timing of the leverage and they're comfortable with the Bitcoin volatility, it makes a lot of sense. But even though the Federal Reserve is the issuer of the U.S. dollar, many people, even though I think it's technically incorrect and foundationally incorrect, think about the U.S. government as the issuer of the dollar. It does extract a lot of power from the dollar that other parties don't one for one. And so I think its decision to issue U.S. treasuries and buy Bitcoin has different consequence than anybody else, not just the value of Bitcoin, but to the value of the dollar.
Yeah, well, the dollar at this point is a pure confidence game. So any signal that you're not as confident in the dollar as the U.S. government, and I think it's very important. Anybody listening to this, watching this,
I mean, just think about this. If anybody was like, if the U.S. government said, "Hey, we're going to own Bitcoin, it's going to help us pay off the U.S. debt," what are the holders of the U.S. debt supposed to think? Why don't I just
hold Bitcoin?
Hold Bitcoin rather than your debt.
Yeah, no, it's a rock and a hard place, but I do think there is going to be a lot of social framing, and it's not going to be clean. It's definitely going to be messy, but I think what you're really focusing in on here, again, is something, if you're listening or watching this, to take home from this conversation and to really internalize that the U.S. government and the Federal Reserve have distinct motives and things that drive them.
There's big overlap, but at a foundational level, they are distinct. They are not one and the same.
Yeah.
And somebody holding the U.S. government holding Bitcoin would, in theory, improve the likelihood that more value is ultimately returned to creditors of the U.S. government than if it didn't, because Bitcoin's more valuable than the dollar. I thought that Saylor had an interesting point where he talked about selling all the gold and using that to buy Bitcoin, which is an interesting idea. I still think that there's a consequence for the dollar, even if they did that. But
that's part of Cynthia's plan too, right? Just to
maybe still buy as much as, I don't know. I didn't think that
the Bitcoin Act, I thought it was
selling
like
gold.
Go to the Fed and get the gold notes, which are currently marked at $42 an ounce, marked in the market, and then use some of that gold to buy Bitcoin.
That might be the case. I'm not 100% sure.
Yeah.
If it were me, I'd just take the tariff. I'd sell it by taking the tariffs and say that we're going to buy Bitcoin and China's going to pay for it.
I like that. It's good framing. I think people will get behind that framing.
Yeah, it becomes a lot easier.
This is like, now you got my mind racing too. Like, would it be better for the U.S. government and to stave off any potential run on the dollar system because they're signaling that they think Bitcoin's a better store of value than U.S. Treasuries? Would it be better just from a regulatory perspective, like eliminate cap gains, eliminate income tax as much as possible, and essentially encourage people to adopt at an individual and business level Bitcoin and build payments and treasury systems at the individual and company level on the private side? Let individual Americans accumulate Bitcoin. That situation, just let it run wild and hope at the end enough American individuals and businesses have Bitcoin that it doesn't even matter if the dollar goes crazy. Does that make sense?
Yeah, I mean, I think it does. I think that it might be politically easier. I'll say two sides. It might be politically easier to say, hey, look, this is money. We're not going to tax it. So, and what they would likely do is, I think that in a prior bill that Senator Lummis had been working on, there was a de minimis exception, which I think was $600, which I think is far too low. Maybe it was something that's like, if you're buying a real good or service, there's not a tax. But if you're trading it for dollars, there is a tax, so that it's more directly tied to commerce. Like, hey, if you use this Bitcoin to buy a car, it's not taxable, but if you're just selling it for dollars, then it is. I think that politically that would be, and optically make more sense. I think that even something like that probably gets killed because there's some other lobbying power that maybe it's people who, are issuers of stock. They're like, wait, you're taking capital gains off Bitcoin? You can't charge capital gains on stock if you're taking it off of Bitcoin. So there's enough private interest that would actually try to
hinder
that. And that's why the most likely thing, the easiest thing, I think, is just an executive order that basically says we're not selling the Bitcoin and we're creating a reserve. I think anything beyond that just becomes a lot more politically challenging of like, how do you acquire it? What are you selling? What are the consequences? Because there aren't a ton of consequences just to say, hey, this is a permanent reserve. And I think that is significant in itself. It instantiates Bitcoin in a big way without the federal government having to go out and say, we're going to sell something else to buy Bitcoin. Yeah. And I think that the consequence for the dollar in a negative way is extended out if they just do that.
Yeah.
Because if they were to do that, setting aside what the federal government does with the debt crisis, because at a certain point, you just have to admit that you're bankrupt and that people aren't getting paid back. At some point, either the market's going to force that on you, or you're going to come up with a plan before the market forces it on you. My view, and I don't exactly know how you would do it, is that it goes a lot better if you pulled the plug rather than having the market pull the plug on you. If you think about a company that does a prepackaged bankruptcy or a restructuring before they've actually gotten to a point of a default that they can't cure, they actually have a lot more negotiating power in that world. So I don't know if that's what Trump is going to do. Maybe he, what he seems to be doing with, whether it be like the Panama Canal or Canada or Greenland, maybe he, wields the power of the office to negotiate external debt away, which isn't ridiculous as an idea.
Well, I mean, that brings up an important point, which is his selection for Treasury Secretary. I've been following Scott Bessent.
That guy has zero understanding of Bitcoin, by the way.
Is external to Bitcoin. Have you been following his posturing at all? Or
some on his, I've seen a few clips, not following closely.
Well, I think very aligned with what you were just describing. He's been openly talking about on podcasts and at events, specifically within the last 12 months, about a Bretton Woods 2.0, like the need for that, like a basically soft recognition that the U.S. government's not going to be able to pay off the debt. We need to get the world powers at the table to essentially figure out how to reset this.
Interesting. He's talked about that in the context of the currency or the debt. Bretton Woods 1.0 was everything being pegged to the dollar and the world monetary order rather than the debt scenario. But I'd be interested to go back and listen to some of the stuff that he said.
Yeah. Well, I imagine this time, like, again, how intertwined they are, distinct but very intertwined. Imagine this time around specifically. Yeah. Considering how big the problem is, that'd have to be.
There likely, it needs to be a negotiated settlement and recognition. And it's not unique to the United States government. Functionally, every government's in debt that in a way that can't be repaid. Now, because the U.S. has been the reserve currency, they've had this drug that they could abuse more so than everybody else. So it's not unique to the United States, but the problem might be as bad here, maybe, here in Japan, probably less so in Europe, but similarly in Europe.
I would not want to be in Europe.
I wouldn't want to be in Europe either.
Europe seems pretty terrible right
I don't want to be in Texas, but...
What do you think this means for Bitcoin? I mean, let's shift from the focus on the Trump administration's policies, the Treasury's policies, the Fed policy, its potential effect on Bitcoin, but take a zoom out. Tomorrow is Bitcoin Sweet 16 as a protocol that's been live and in the wild. January 3rd, 2009. Tomorrow's January 3rd, 2025. Bitcoin turned 16. It seems like it's reaching a state of maturity, at least from acceptance that it is here to stay. It is an asset worth holding, whether you're an individual, a company, a nation state, whatever it may be. And you have to imagine everything we just talked about for the last however long, 45 minutes, whatever it may be, is on the minds of governments, individuals, companies across the world. And granted, it is a very short period of time, but since September, Bitcoin has significantly increased in value. Who knows if that's just typical cycle, but the 10-year going up, and it's going up with the dollar right now. Dixie's pumping. Bitcoin is going up as well. It seems like it's moving in ways it hasn't historically compared to traditional markets, particularly connected to the Fed and the debt. Is Bitcoin going to manifest as a true safe haven asset?
In the short term, no.
Okay.
It's just, it is too under-owned to behave as a short, as a...
Get into that. Paint the picture of how under-owned Bitcoin is.
I would say that it would be a stretch if 1% of the population had any material exposure to Bitcoin. I can't remember who, like one benchmark I would use is like in the Microsoft shareholder proposal. It was 99.5% that said no.
Yeah, but granted, historically, shareholders voting against board proposals is like that percentage. Like, it's never happens.
Okay, but how many of the S&P 500 companies own Bitcoin? Less than 5.
Is MicroStrategy in yet? Or they're in NASDAQ?
I don't think
Square, Tesla. Yeah, who else?
Is MicroStrategy in the S&P?
No, they're in the NASDAQ.
But even if they're not, it's like, or even if they are, if it's Square, Block, Tesla, assume MicroStrategy is. Is there another one?
No, less than 1% of the S&P 500.
Yeah, so less than 1% of the S&P. There's a 5. Yeah, 5 would be 1%. So it's a good benchmark to say no more than 1% of the population has really figured it out. And, Tesla hasn't figured it out either. They own some, but they sold 75% of what they held. They bought like 40,000 Bitcoin, and then they now have 10,000. Now they've probably learned something about Bitcoin in the interim and probably have a much better understanding about it now than when they bought it. But since Tesla bought Bitcoin in 2021, not a single S&P 500 company has disclosed that they bought Bitcoin. If they are, it's one or two, but I don't know one by name, and I think we would know it. So the idea of something being a safe haven, I think about it as people are already piped into this asset, whatever that safe haven are, and when something happens that becomes dislocative in traditional markets or causes people to become more conservative, they shift their allocations to the things that's more conservative, and they're already piped into that. They already own
there's infrastructure built out for those flows to flow through.
Yeah, there's exactly. There's infrastructure. The people that want to own the asset already do, and they're increasing their exposure in that time of fear or in that time of something occurring to need whatever you go to for a safe haven. So if less than 1% of the world is really piped in, and it doesn't mean it's like, yeah, you can buy, virtually the entire world is piped in to be able to buy IBIT, the Bitcoin ETF. But if fewer than 1 in 100 understand Bitcoin, how do you flee to the thing that is, quote, supposed to be the safe haven asset if you don't own it in the first place? That fleeing is typically, I'm going to increase my exposure to this safe thing by 5%. Well, 99% of the world has 0 functionally. So it by definition is not a safe haven. It's the one thing that's not correlated to dollar. It will be the one thing that continues to be not correlated to dollar because it's the one thing that's actually competing with the dollar. So I think it's going to continue to behave like it has over the last 16 years, but also the last 4 years, which is it's going to go up as more people figure it out, and then some of those people are going to sell, or existing holders are going to smell a small percentage. So there's going to continue to be cycles in the short term, and that it feels like we're still in the very early part of a adoption wave, that roughly 100K feels stable and boring now. And there might be something that happens a la, March of 2020, where there's a liquidity crisis and Bitcoin goes down. Maybe it goes down again to 70 or 60, but it bounces back and then far exceeds any other assets when they print money. So I don't necessarily think that's going to happen. I'm just saying something like that's possible because there is a looming dollar credit crisis, depending on what the Fed does. And what the Fed has shown us to do is that from 2008 to 2020, they moved a lot faster, or 2019 really. So I would expect them to move even faster. This time, maybe they preempt it. Maybe they start printing money before it becomes apparent, and there isn't that real acute liquidity crisis.
That's interesting. That's That's a change of thinking from you. You've always said they'll never print until the problem metastasizes.
I don't. Until they do, I don't think that they will. They've always waited for the problem. But what they shifted from 2008 to 2020, and Neil Kashkari, I would say, was probably key in this, where he is basically signaling the alarm, saying like, we can't allow what happened in 2008 to happen. And if we wait, it's just going to make our problem larger, and then we're going to have to do more eventually. So that psychology has shifted. My view is that it is very difficult politically, optically, for the Fed to go print a bunch of money when food inflation is 10 to 20%. Every time I go buy food, I think, how are people not feeling like the dollar's hyperinflating every time they buy food? It's insane, right?
I think people do feel like it.
I think so too.
Did you listen to the War Mode episode?
I need to watch the last 30 minutes. I've listened to the first 2.5 hours.
I think that was a great insight into, I mean, shout out Billy and Spud, but two guys really haven't been focused on.
Oh, actually, no, I did. Yeah, I watched the whole thing. Yeah.
Yeah. I mean, with Spud talking about how much paint has
gone
up.
No, that was a great part.
Yeah.
Where he was talking about where, they basically take that on and it's a risk, it's an upfront cost. And it was something like, paint going from like $20 to $100, like good paint. It's like, no, you can't use good paint anymore.
It's 5X.
Yeah, something like that.
Yeah.
So I just kind of go off on that to say that it is difficult optically for them to come out and print a lot of money without there being some market event that allows people to say, yeah, I understand that there's inflation, but the market was crashing, so they had to do it. So I still think until they cross that chasm, it's more likely that they wait for there to be a clear liquidity crisis to then step in to print money. I'm just saying that they certainly shifted from 2008 to 2020, and maybe they go the step further this time. I'm raising that to say, in the context of Bitcoin, everyone always has to have their head on a swivel. You have to be cognizant of something like March of 2020, where Bitcoin went from 8,000 to 4,000 right before the halving, right? So many people. It was 2 months before that 2020 halving, May of 2020. And Bitcoin bounced back and then massively outperformed every other, broad asset or index. I think, if Bitcoin went from adjusting from that 8,000 down to 4,000, then back to 8, Bitcoin's up approximately 12 times. And something like the S&P is probably up 75% or one multiple. Something like that could happen again, but it still feels like we're right in the early pocket of an adoption wave. So while something like that might happen in an acute crisis, it feels like there will be significantly more adoption from here. But more adoption from here means it going from 1% to 2% or 0.5% to 2%.
That's crazy to think. Like a doubling of adoption to 2%.
Yeah.
To 2%.
So I think in that world, like, Bitcoin can't be the flight to safety because it's, one, definitionally under-owned, and then it being under-owned is the best signal for not understood.
Yeah. Did you read Ross's letter?
He sent it to me. I still need to read it.
Okay.
Yeah, I was going to read it tonight. I read some of the experts, but I was going to read the whole thing tonight.
It's really, I highly recommend, if you haven't read Stone Ridge's annual 2024 investor letter written by Ross Stevens, founder and CEO of Stone Ridge. Go read it. But the reason I bring it up is, external to the letter, I think one of the trends I've been paying attention to, I know we've been talking about this on the side off and on over the last year, but I can't get my mind off of it, is this idea of giving Bitcoiners the ability to not have to sell their Bitcoin. Like Unchained is a perfect example. Like the lending desk giving you the ability to get dollar liquidity without selling your Bitcoin. And it seems like more products are coming to market that are going to enable that, which should hold supply off the market for longer. Who knows how much supply, but I think in terms of building the infrastructure that would make Bitcoin a potential safe haven asset in the future. These types of products, and Stone Ridge talking about NYDIG spinning out a product that allows you to get lower interest rate loans, and they're essentially leveraging premium payments on insurance products that they have exposure to enable that type of dollar liquidity for Bitcoiners.
Yeah, I think that's great. And I think all sorts of maturation and capital markets development in and around Bitcoin and for people that hold Bitcoin helps accelerate the normalization and adoption of Bitcoin. So I think that's good. Nothing can get around the fact that someone first has to understand Bitcoin. There will be a time. We
always come back to this.
There will be a time.
We always come back to
when
this.
People adopt Bitcoin, like they pick up the phone and use it and they don't have to understand it. But we're not at that time yet.
That's why I like these products, though, because they're focused on people who do get Bitcoin.
No, I like the product too. I'm just saying that to shift Bitcoin forward, we need more adoption. So you put out the comment about 2025 is going to be, I'm going to be even more militant about helping people understand Bitcoin. Is that a good goal? Great goal. But that 1 in 100 problem, or realistically, it's probably more like 1 in 200. It needs to become 1 in 100, 2 in 100, 3 in 100. And what drives us from where we're at to that point is some prior understanding of Bitcoin. So somebody listens to a podcast, somebody reads a book, somebody goes to a conference and hears a talk, and then something happens in the real world. The Fed starts printing money more. Those Bitcoiners were right. They said they were going to have to print money, and then they did. And this printing of money is tied to Bitcoin. Or, somebody hears somebody talk about how the money printing is what causes inflation, and the way to protect yourself again is Bitcoin. And then, they go to the grocery store and the eggs are $15 a dozen rather than $9 a dozen, or $8 or $7, whatever it is. They keep getting higher, and then someone looks up and Bitcoin's $200,000, and they say, "Okay, I've connected this prior knowledge to something in the real world that's allowed Bitcoin to unlock for me. That the way to really accelerate is getting more people to understand Bitcoin, and that is a function of education."
Yeah, and unfortunately for us, the Silicon Valley tech bros behind Trump are distracting people. I saw you tweeting at Chamath the other week.
Yeah.
It's bad.
I think so.
I mean, he quote tweeted Kyle Samani, who was pumping the helium token in his talk.
Yeah.
Explaining.
It doesn't help people understand Bitcoin, right?
Do you think that's self-serving, or do you think he doesn't understand Bitcoin?
I think he doesn't understand Bitcoin, and I think it's also self-serving. I think he, from his prior podcasts, he's a Solana bag holder in his own terms, to the tune of, like, he made a comment that made it seem like he owned $1 billion, which is a lot. But he's someone that is out there, positively talks about Bitcoin, but I would say has a fiat mindset. He wouldn't make the comments that he does about other grifting things if he really understood Bitcoin. If he did, then he's just a sociopath, which he might be, but I think it's more likely that he doesn't understand Bitcoin. He's, right or wrong, no fault of his own, fiat-minded. He
wants to issue 100-year bonds.
Venture investors think like dollars their unit of account. They think that their bank account's going up in dollars, even if they're translating Bitcoin to dollars, is the measuring stick of success. Not necessarily like in bravado, but I'm playing the game and I'm winning the game. I'm winning the game means I'm creating value. If I'm accumulating more money, which of course it's not, because they're just printing more money. But I think the more likely explanation of that Silicon Valley grift mindset, which is functioning, all of them. The other thing I said was that Silicon Valley is largely a monoculture. It's all groupthink. One person does something, or one venture firm does something, and then everyone focuses on that theme. And I have not met one Silicon Valley traditional VC that understands Bitcoin.
Not one.
Not one. I don't know if you have. I'm sure there's somebody out there, but not in that, Sequoia, A16Z, Benchmark, whatever the other ones are. That they all got on this combination of blockchain revolution and Ethereum, and they sold that story to a bunch of people, and those people happen to be the people that are around Trump. Peter Thiel said that he sold all of his Bitcoin, or functionally all, in his stuttering way. And then
these people can't talk.
And
straight.
Peter Thiel is the guy behind Vance, right? And David Sachs, he probably speaks the most cogently about Bitcoin, but still he's got blind spots. He invested in Multicoin, right? So I do think that it is a...
they also invest... props to them. They invested in Fold. Like they're in Fold.
Yeah, and I believe they also invested in...
River. I think too.
I think they...
Could be wrong. That could be
I think they invested in Voltage. So, but still, when you have somebody going out there and then thinking that there's some fundamental value in Solana, it's kind of, it might be one of those things where they are making calculated risk assessed, well, what's the probability of this versus that, without...
Yeah, it's tech investors thinking it's tech innovation, not monetary innovation.
And that there's a probability of success, and if successful, then this will have a positive outcome that will outweigh the failures of these other 9 investments. My point is that that tech circle that's around Trump seems to be more of the Silicon Valley group thing that doesn't understand the money side of Bitcoin. And I think that could stand in its way, but it's not going to stand in the way from somebody buying the Bitcoin Standard or, listening to a podcast, because there's actually there's truth and objectivity in the world. And despite all the noise, people are finding the truth. And what it feels like to me, like the year of 2025, even though Bitcoin is so under-owned and so misunderstood, or is understood a word? No. Understood? No. It's certainly under-owned. That other word's not a word, but that...
Little understood.
People do not understand it. The very few people understand Bitcoin. That it does feel like for whatever the critical mass, because I've always thought that the critical mass is somewhere like 5 out of 5% of people. That once 5% of the population gets it, once it's 1 out of 20, it just snowballs, and that's when there will just be the one exit of the crowded theater, somewhere around 1 in 20 people. So if it's 1 and that it might, maybe it's 1 in 100, maybe when 1 out of 100, I don't know, but there's going to be a tipping point, and it's not the majority. It's somewhere a lot earlier than people think. That it feels like we're getting closer to the point where a critical mass of people that have not yet accepted the reality that Bitcoin's the new world order, the new form of money.
Well, be careful throwing that around.
What do you mean?
You don't throw out new world order. We're not the new world order here.
I don't even know what that
You're gonna get.
means.
You got like conspiracy
I'm
theorists
WEF.
gonna be like, yeah.
Am I WEF now?
Yeah, you're WEF now.
Okay, but I'm saying it feels like you're in the new standard of money.
The new monetary order.
The new monetary order. That no one controls it. You just all have to play along now. That people who've been paying attention but that have been denying feel like they're in a straitjacket. Like they want to keep finding some problem with Bitcoin, and as it finds equilibrium at approximately $2 trillion, and as the idea of a strategic reserve is being talked about for a number of different countries, and
Ray Dalio is coming out saying
it becomes harder to deny. And you just see, like, when I make the straitjacket analogy, it's like there's less and less wiggle room to deny it. You're just kind of taking a lot of energy to not make a lot of headway. That the people that are curious about it, it's easier for them to find a resource and understand it, and it's becoming that much harder to deny, and it feels like we're close to that critical mass. So,
yeah. No, and I really liked your comment on the monoculture in Silicon Valley, and that community, if you will, being disconnected from the reality of the common man, the everyday American citizen. I think that popped up over Christmas with this whole H-1B visa.
That's a psyop.
Why is it a psyop?
Because somebody wants you focused on it.
We talked about this in text, didn't we?
Yeah, we did, but now we're on a podcast.
Yeah, what did we discuss?
It's a psyop against...
What's it distracting us from? What did we come to the conclusion?
Deporting violent illegal criminals and securing the southern border. That there was some interest that wanted it to be about, oh, you just don't like immigrants. And so the whole H-1B thing came out of nowhere, was not... I feel like Trump's made some comment about it in the past, but like it was non-existent on the campaign.
Yeah, then they forced the issue
and
over
then,
Christmas.
And then suddenly Vivek Ramaswamy makes a dumbass tweet, and then somebody else put out a tweet about what's the guy?
Serum?
Sriram?
Serum?
I don't know. But that guy.
Yeah.
So it's a psyop, but go on.
I was going to say, like, highlight, and I was going to...
They want people to focus on that rather than the bigger issue, which is the southern border, locking it down and deporting violent, illegal criminals is the number one priority.
Yeah, but I do think there is some validity to the idea that There
is, but that's why it's a psyop.
Yeah.
There's got to be some validity.
Okay. Yeah.
To distract everybody.
Okay, focusing on the validity. The validity is that Silicon Valley completely disconnected from, and going back to Vivek's tweet, which I think had Vivek on a couple of years ago. I think he has good intentions, but it was completely misguided with this tweet and this idea of...
I think he has enough self-awareness to realize that he really fucked up.
Yeah. But the silver lining of it was people were like, all right, you're going to put this out there. Let's go search the H-1B visa database and see who's actually coming in via this program. And it was obvious that it is being abused to the point where it's essentially just corporations trying to bring in people to pay them lower wages at the expense of the American.
I do think that that's, again, not the intention of the program, but likely the solution. I thought it was funny. It was just as a side. We were texting about how it was a psyop, and then I was sitting on my porch, and the postman walks up to my door, speaking some foreign language that I couldn't even tell you what it was. I'm like, why is this? The U.S. Post Office. It wasn't even like FedEx or DHL. Wasn't a private corporation. I was like, why is this? Like, he was literally actively on his, Bluetooth talking to somebody in a foreign language. Like, why is this the postman?
This is America.
But anyways, I do think that it is, and it was part of the, again, I'll accept the psyop, but who was the guy, Sam Hyde?
Yeah.
I never heard of Sam Hyde.
Oh,
but it was great that.
It's the ghost of Kiev.
He's the ghost of Kiev. Samuel Al-Hid.
Is he?
No. Sam Hyde, I've been on a Sam Hyde for he's like a millennial, most famously known for his comedy, but I think if you understand his comedy, Logan, correct me if I'm wrong in your thoughts on him, but I think at the end of the day, he's like a very impressive, I don't want to call him philosopher or whatever, but like he thinks very hard and he's very articulate about this, and I think comedy is the medium through which he gets a lot of these political ideas. Like, he gave a TED Talk.
Yeah, so, well, I'd never heard of him.
Yeah. So
the first of my knowing him was you put that tweet out, or several people did, but he put that out on New Year's Eve, right? It's like a 45-minute video. Everyone should watch it. It'll propagate the psyop, but in the interest of that, go ahead. But he talks about in that how it's a very Marxist idea to think about individuals as economic units. And that if you're just thinking about them as economic units, then you're missing the point. That you have to believe that there's worth in each individual, and that if you don't care about the American, and one of the broadest point he was making was that if you don't care about the American people, first and foremost, and you're just focused on American idea, you're not equipped to lead. But tying that back to Silicon Valley investors, it does feel to me, and part of it might be biased by my own frustration, that there is very much a groupthink, and no one seems to be able to break out of it to understand Bitcoin to then lead the way in helping all their peers understand that they've missed this or they've misunderstood what's happening here. That if the Silicon Valley mindset feels very, and also like not just talking about Silicon Valley VCs, but what
their capital produces.
What they focus on building as a region. They used to create value. Now it feels like they are more fiat than anybody. That they think about everything as a fiat unit, economic unit, and they're optimizing to make fiat money and to track the fiat scorecard, because the accumulation of money in a sound money environment is associated with the production of value. That if nobody could produce more money, the person that has the most money has produced more for others than they've consumed from them. So there's something noble in that. But if you live in this broken world where you can acquire money without actually delivering value, then it becomes very pernicious as an economic incentive. But if you don't know that, you still might be chasing that end goal of, well, if I'm accumulating more dollars, that's a signal that I'm delivering more value, when it might not be the case. It feels like the Silicon Valley investors have this very fiat-minded of focusing so much on the economic unit and failing to understand that they stopped actually creating things and creating things of value. And that's just an unfortunate reality, and hopefully they come out of it and realize that there's a difference between making money and producing value. If you're producing real value, you will also make money, but you can make money without producing things of tangible value. And in this world of crypto and fiat, they've optimized for trying to make fiat rather than produce value.
Yeah. No, it'll be actually bookmark this. Let's keep checking in on this. Just thinking like post 08, like Wall Street financial system, rightfully so, is the boogeyman, not the boogeyman, but the thing that people pointed out was like, you created this problem. You hyper financialized the global economy and levered it up and destroyed it. And it's funny, just sociologically post 08, like there was a big confluence of factors leading to this. I think one major factor was a disdain for Wall Street, and many people started focusing on tech. So it'll be interesting anthropologically at some point in the future to do a retrospective and just see if that shift of talents and people not recognizing that the problem at the core of it was the money. It just shifted from Wall Street is probably still a material part of the problem today, but a lot of it shifted to Silicon Valley and tech as a sector.
Yeah, I've thought about how when I came out of college, the brands that were most pristine, if you were associated with the brand, that was a signal that you were the best. It was Goldman Sachs. It was Google. In a different ballgame, it was Harvard, and it was anything having to do with Silicon Valley. Like if you worked for Andreessen Horowitz before it was A16Z, that was the equivalent of Goldman Sachs on Wall Street. And again, it might just be my echo chamber, but for each of those, like Google, A16Z, and Goldman or Harvard, their brands are now counter signals for people that are out of the matrix. That if you're still using those as your benchmark, then you're both chasing the wrong thing, and it's also, there's a growing number of people that look at you and say like, oh, that was what you wanted to pursue? Like why wouldn't you do something more noble than that? Or something more worthwhile. So it's interesting how that shift, where it was the disdain of Wall Street after the financial crisis, but it might increasingly become this super out of touch, we're going to change the world, kind of fraudulent Silicon Valley mantra.
Yeah.
And I am curious. I mean, I am hopeful that change trends. The way that we got on this was that the people around Trump in that inner circle are all these Silicon Valley tech people who seem to, for the life of them, not be able to understand Bitcoin. I hope that changes. It's not like, may they all be damned and
burn the boats, burn the bridges.
Yeah, hopefully they figure it out.
We're not trying to burn bridges here, Silicon Valley.
Hopefully
to stoke a critical discussion that will hopefully be ongoing. And I think we've talked about this. That's one thing I worry about with this, the people surrounding Trump and this administration as it pertains to economic policy and crypto policy, quote unquote. I hate that I even have to say that. Like, it should be Bitcoin policy. And
but the thing we got on this point of it's not going to be those people that help accelerate us towards a better understanding of Bitcoin, those people that are around Trump. Maybe RFK Jr., maybe Vivek, but certainly not Vance, certainly not Sachs, he's made his head of, quote, crypto.
And AI.
And all those people in the circles around Thiel, Vance, Sachs, because they're a monoculture. While that's the case, I think everything's lining up, like the stars are aligning of unlocking a massive wave of people who do real things and create real value in the real economy to understanding Bitcoin.
And I think that's the beauty of Bitcoin as well, is while certainly I think we would both agree that we would prefer for this incoming administration and the people being placed in particular positions to really grok Bitcoin and understand it, the gravity of it, and the importance of putting forth good policy. I think, again, going back to the war mode episode, like more education, getting to the minds of people like Billy and Spud and their audience and the small business owners. That's Zaprite.
Is that the other guy's name, Spud?
That's his nickname, yeah.
Okay.
Andrew's his real name. But
yeah, when I was trying to find his name to write a note in the book for him, I was like, I mean, I've always listened to podcasts, but I don't even know the guy's name.
Yeah. Point being, like, you don't need, while it would be preferable for those people to put forth sensible and policy and not get distracted by broader crypto, ground up, people getting this information, you see the Zaprite every day, is happening.
Yeah, I mean, I think that information is getting out there. And I think maybe it's that, because I do think you and Will going on the War Mode podcast and having that long discussion, it brings really important information to War Mode's audience in War Mode's own voice, in Billy and Spud's voice, of trying to understand it and reason through the questions and asking. And I think one of the things that was most consequential about the 2024 campaign cycle was Trump going on all the podcasts. So I think that one of the things that hopefully continues to happen in 2025 is not only someone like yourself and TFTC getting more and more, bringing more people in to the tent, like having people like Sam and Courtney, who you had on discuss health, bringing kind of people into our world, but then also us going on more mainstream podcasts and talking to their audiences to help them on. Hopefully Rogan having somebody on that's a Bitcoiner that actually understands it, that as a strategy to having people understand the message is having somebody else be able to ask questions that's actually, not initiated or doesn't yet fully understand what's there, but getting to ask the questions to be educated themselves. Like there was the podcast that, who was it? Like Breedlove went on a podcast with Danica Patrick, getting more Bitcoiners to go on.
You went on Danica Patrick's podcast?
Yeah. Which, she's got a huge audience. And so I expect that more of that will happen.
Are you ready for Rogan?
What's that?
I think it's got to be you or Safe. I mean, you are Austin.
I am in Austin, but I think Safe would be best. If Safe can't make the flight, then I'd be B team. But
I want to say, do not.
No, I'm just saying that
push yourself to the B team.
Hey, Safe was on CNBC. Finally,
he did a great job too.
Did a great job. And Joe Squawk was
drooling over him.
drooling. So that was great.
Speaking of this, Matt McCusker, Billy's brother, we got to get it on the books. We're talking to his brother. We're going to schedule
Yeah. Isn't he
podcast.
here?
He's going to be in here. Yeah, he's here.
Okay.
He's going to come in.
Yeah, so I think just the grassroots of getting, there's no way around it. It's like Trump being in office, the strategic Bitcoin reserve, more people talking about strategic Bitcoin reserve, certainly positive. The circles around him, not positive to accelerating Bitcoin. All of it is more positive than if Elizabeth Warren was functionally running the administration's policy. I like to think, or the framework I would have is that Bitcoin doesn't really need favors and accelerants. People can make our lives miserable if they want to make our lives, like Elizabeth Warren running policy would be a disaster, and just as an individual make our lives harder. So just taking that
pressure
away will be great for Bitcoin over the next 4 years. Even that, over a long enough time horizon, would accelerate Bitcoin as well. The trying to strangle it ultimately ignites the fire, but it can make a lot of people's lives miserable in the interim, particularly people that are building Bitcoin tools in this jurisdiction. So from that standpoint, it's hugely positive. They don't need to do anything else other than not continue Operation Choke Point 2.0 and otherwise really try to restrict Bitcoin from a tax policy or what the IRS is trying to do right now. So I think it's a huge positive. All of that exists as a baseline. The true accelerant of Bitcoin is more people understanding it. And so if we're going to be militant, we're going to need to get people in this studio and go out into the world and talk to other people's podcasts.
Yeah,
Trump led the way. We need to follow.
That's your advice for Militant Marty? Just get on more podcasts?
You bring those people in like Matt McCusker, Shane Gillis. I expect Shane Gillis and Matt McCusker to be in this room.
They're pretty busy men,
They're busy men, but they're making a lot of money. They need to be preserving that purchasing power because, while they got it good, they need to be maximizing it.
There's too much debt.
And then going on their podcast, you getting them on, like you and Will going on the war mode and having it be, I don't know what you call that, a simulcast or
cross post. They haven't posted on their feed yet. I need to text Billy. Billy, get it up.
Yeah. That cross post.
But if you go on the YouTube, it's all they have a rabid fan base.
Yeah.
We're in it, but it's been crazy to see the YouTube comments of "I'm here for war mode." Actually learned something. It was cool.
Yeah. They need to get that actually cross posted. So I'm saying that would be good. You going on.
We need
Normie.
you. Stop talking about me. You.
All of us.
Yeah.
Everybody. That will be if you want to militantly accelerate, sitting down with somebody that has an audience of 1 million people.
Hey, call her daddy. I'm here.
No, don't do that one.
I'm here.
Mark Cuban looked so pathetic.
Yeah, it's because he is pathetic.
Wait, did he go on the Call Her Daddy? No.
Did he go on Hawk Tua?
He went on Hawk Tua.
She hasn't shown up. She launched that meme coin and went dark for a better part of a month now.
Isn't it a sign of the fiat economy when Hawk Tua can become
That's a psyop.
It's just whether it's a psyop.
She went from like man in the street interview to the biggest podcast.
It's not the biggest podcast, but
yeah,
it's just a podcast.
Yeah.
But the fact that Mark Cuban had the humiliation ritual of going on that podcast, like might make it all worth it.
Do you think Mark gets Bitcoin?
No.
Do you think we'll get Kyle to understand Bitcoin this cycle?
The year 2025, do we get Kyle? I say yeah.
Come on, Kyle.
The year 2025,
warm.
Kyle Bass understands Bitcoin. He comes around. I believe this is the year.
Kyle.
I'm optimistic. It's
not some Chinese psyop. We can walk through.
I was joking with somebody that somebody thinks it's a Russian psyop. Someone like who is it? Some big Wall Street investor thinks it's a Russian psyop, like a household name. I was like, yeah, it's kind of funny because that person thinks that it's a Russian psyop Kyle thinks it's a Chinese psyop.
Others think it's an NSA
Tucker Carlson
psyop.
thinks it's the CIA.
Yeah.
So here you got three people, pointing the gun. It's like, oh, it's China. Oh, it's Russia. Oh, it's the U.S. And it's like, guys, don't you see what's happening here? Like, it just is, and it works. And if there three different of these, high-profile thinkers are thinking that it's, one of the U.S., China, or Russia that all have conflicting interests, like, there can't be a story that it's one of the three of them, and it's more likely to be none of them. And the reality of the situation is Bitcoin has to work. You have to assume that it was, and then be able to reason to yourself of knowing why even they couldn't stop it. Wait.
Let's dig into this, because I love the way you explain this. And this is, you need to write.
So this is for Tucker Carlson.
This is the next gradually then suddenly essay.
Okay.
Why a government didn't create Bitcoin, or even if how would you phrase the chapter?
So I don't know what I would name it, but my understanding is that Tucker Carlson thinks that the CIA created Bitcoin, or CIA or NSA. That's his hang up, and I don't really care. Other than he has a big microphone, so it would be helpful for him to understand it. But that the logic that you have to approach it with is that for Bitcoin to work. Now, I don't think that the CIA created Bitcoin, but in order for you or anyone to adopt Bitcoin as money, you need to approach it from the perspective of, as a thought exercise, let's assume that the CIA created Bitcoin. Now, I need to evaluate whether there's any consequence to that. If I'm correct in my wrong assumption that the CIA did create it, could they stop it? Because the only way that Bitcoin is viable as money is if they in fact did create it, and if they in fact couldn't stop it. If there was nothing that they could do to undermine it. Only in that scenario could Bitcoin be viable as money, because it has to be the scenario that whether or not whoever created it could not now undermine it. Whether that was Satoshi Nakamoto, a genuine person that altruistically wanted to do some good in the world, or
Satoshi Nakamoto, the CIA spook.
Right. It has to have been either of those two characters, and not be possible for
either of them to
prevent, regardless of who that entity is in anybody's mind. And that in order to be able to reason through, is there anything that X interest, the U.S. government, the CIA, the state of Russia, the state of China, is there anything that any one of those interests could do individually or together to prevent Bitcoin, requires some first principle understanding of how the Bitcoin network works and why it works. Being able to visualize this construction of nodes that are very ephemeral, that can come and go and be spun up on new hardware and disappear, keys having copies and being in multiple places. And then that being the how of how the network actually works and passes messages, and why it works, and being so redundant, and why it would be impossible to stop by any individual actor or groups of actors. And then the critical why it exists, of why the world needs sound money, and why everyone has an incentive to adopt a form of money that can't be printed, and then why everyone has an incentive, not in terms of the greater good, but in terms of their individual selfish interest, to ensure that nobody else can cheat, that everyone has the incentive to prevent everyone else from printing money. And because everyone has that individual interest, that's why the Bitcoin network, from an economic incentive perspective, is so sound. That in order to go back to the challenging of, if the CIA created it, can they now stop it? It requires that knowledge. And so I do think it's a good thought exercise for someone that's hung up on, well, what if the government created it? It's like, well, assume that they did. The only way it works for anybody that's adopted it to this point, they've had to reason through that. They've had to come to the conclusion that it doesn't matter who created it, in order for it to be money, regardless of the who, no one can stop it.
Steelman. Agree with everything you just said. But Satoshi, CIA spook, accumulated 1 million Bitcoin. Is he just getting does the US government just get an unfair advantage?
No. Does anybody who held Bitcoin earlier get an unfair advantage?
Yeah. Okay. That's what Tucker's going to say. When you're on Tucker Carlson, we're manifesting right now. Logan, manifest with us. Hold your hands up like this. There you go.
What's he going to say? He's going to say, I think this is a poor steel man.
I'm not saying it's a good steel man. I could just see, like, this is what somebody's going to say.
Okay, wait, repeat it.
Like, is it fair that the U.S. government launched this, accumulated 1 million coins before every other nation?
So my answer to that...
Running with the assumption, not saying that we believe this. This is CIA.
We don't believe it.
Satoshi the spook.
Best understanding, he's a innocent, young American or Western European that speaks English and created Bitcoin because there's a problem with printing money. That's almost certainly what happened. But again, for this thought exercise to help people who get hung up on the idea that maybe it was the NSA or maybe it was the CIA, we walk through the logic of you have to assume that they did and then be able to understand why even in that case they couldn't stop it. Okay, assume that they did and Satoshi is rumored to have 1 million Bitcoin. You say, no, if you created sound money for the world that worked and everyone can voluntarily opt in, no one has to use the system, and there's 21 million, would the person who or entity that created it get 5%? Because they can. The beautiful thing about it is no one can create money and you can only spend the money once. So if you don't use that money to create things of value, then it just gets eventually distributed. So if you think about it as an individual entity, it's the exact same dilemma which people are going to come to and say, you bought Bitcoin when it was $1,000. This isn't fair. You have 100 times as much Bitcoin.
As much purchasing power. Or maybe not.
Well, in many cases, it becomes orders of magnitude harder to accumulate the same amount of nominal Bitcoin with each passing cycle. So the answer to that is that the people that valued Bitcoin before everyone else afforded everyone in the future the ability to value it. And securing private keys and carrying those private keys forward to be able to spend the units of economic value to facilitate trade and create things of real world value. Everyone should get that benefit because they afforded everyone else in the future, not just in the rest of our lifetimes, but everyone beyond there, right? So I think that there's going to be people that say it wasn't fair. Like holding Bitcoin was easy, or seeing Bitcoin before it was easy to see was easy. But that dilemma of people that were early to Bitcoin, like
it's applicable to Satoshi the spook.
Yeah, 2010 is applicable to Satoshi the spook. So if Dustin Trammell, one of the first Bitcoin miners on the network, got a lot of Bitcoin, then he valued Bitcoin before everybody else, and he afforded everybody else the ability to because he valued it, right? So it's to everybody's benefit because it's this infrastructure and utility that applies to 8 billion people in the world. And so even the last person that adopts Bitcoin that's alive today and future generations is going to benefit for what people very early did. So, of course, it's great. And if the guy Satoshi came back and dumped 1 million Bitcoin on the market, that too would be good for Bitcoin. There wouldn't be a risk.
When can we expect the essay?
I've got a long list of to-dos.
I think you put this one up to the top. I like this one.
I was thinking that the quantum question would be...
quantum's so...
But it gets people. I've had people that were hardened Bitcoin. They're in. 3 different people that are close to me and be like, hey, we're good with this quantum stuff, right? So I think that it's one, because that was also something that Chamath came out and talked
And it was
about it.
completely wrong.
He's like, when I saw that Google came out with this Willow,
I had to cancel all my meetings.
I had to cancel all my meetings and do the calculations to be like, when does this break Bitcoin? And what the math says is, and there's some, questions around the collision resistant or whatever talk these bullshit artists
You're
do.
giving like a Trump impression for Chamath.
I feel like sometimes
Did you pick that up?
I feel like sometimes you do like an Irish. I don't know. There's yeah. Okay, whatever. But my point is that that one gets people.
Yeah.
That Chamath said is like Bitcoin could be broken in 3 to 5 years, and what those people never, do the math on as Silicon Valley quants and intelligentsias is like, when does JP Morgan break then? When does the digital US dollar system stop working because it's built on
about HTTP? Like, literally leverages
they always do this on
too.
Bitcoin because they're so stupid. But so I feel like the quantum question, I don't feel like I individually can write it, but I think from a logical standpoint, I'll be able to create a very logical hierarchy to help people reason through it, and it gets a lot of people. I'm going to talk to Jimmy about like him writing like the technical aspects, and then me kind of providing that logical architecture. So that was going to be the next one. But what would the title of the
Satoshi the Spook?
Bitcoin? Oh, we'll figure it out. But I agree that that's a good one. Even the idea is, even if a spook created Bitcoin can only work if the spook can't stop it. And so you need to understand why that needs to be your adversarial thinking, because it is true. You have to assume adversarial that your enemy created it.
Yeah.
And if your case, your spook's your enemy, then assume the Chinese CCP created it. Assume
Vladimir
Russia.
Putin made it in a basement.
Assume the CIA, and then try to figure out why.
What if Mark Cuban invented Bitcoin?
Not possible.
I think I'd have to dump it. I think that would be the only
You should have
thing.
seen him. I didn't watch the Hawk 2 podcast. I would never do that. But just watching the 2-minute clip that was on Twitter, that guy could not have created Bitcoin. Even before that, he said that
Maybe he's playing dumb.
He would rather have bananas than Bitcoin. He can at least eat bananas.
He's playing
and
dumb.
Didn't Justin's son buy the $6 million banana and then eat it?
Yeah. I talked to him about it after.
You did?
Apparently, like, the art installation.
Did he do that because of Mark Cuban?
I don't know if he did that because I don't know. But apparently he was telling me, like, he has copyrights to the it's like the design of the installation is copyrighted. So like you can take duct tape and tape it to a wall and literally have museums rent it out, and he gets like copyright royalties.
Wait,
on that. This is very fiat.
Oh yeah, I don't even want to.
He was describing it. I was like, wow, this is incredible.
I have friends that are in Normie land, TradFi friends, like combination of hedge fund, private equity, wealth management.
Are they getting it yet?
No, they see things like that and they're like, this is Bitcoin. That's the reality of the majority of America. They see things like the shitcoin crypto guy buying the banana for $1 million and saying he's going to eat it. And they literally will text me that and be like, this is Bitcoin. And I say, no, that's fiat.
Okay, we've got our third essay for Gradually and Suddenly Volume 2. The banana on the wall is not Bitcoin.
Yeah. Crypto is not Bitcoin.
No. I think we're close to a volume. We're close to a volume 2 here.
It is shocking how many people see the most degenerate things. NFTs, bananas, crypto shitcoin guys buying them for millions, all the grift, none of it's Bitcoin. And people have this mental association that is Bitcoin. That's real. That's what we're up against here.
Militant Marty is going to come out. Maybe that militant for Bitcoin adoption, but should we be more militant towards the shitcoiners?
I think part of the militant, we got to be positive here.
Yes.
But we have to reinforce in each one of those venues or communications in an express way that this is something different, and hit it head on. Because if you think that you're doing that without being express and hitting it over the head 10 times, I've sat in conversations where 2-hour session, I'm explaining Bitcoin, saying things like, money converges to one. And then a wealthy dude will introduce me to his friend and say, hey, this is Parker. He's my crypto guy. Like,
how's it feel to be somebody's crypto guy?
So it's bad. Some days it's made me want to quit.
I'm not your crypto guy.
But ain't your buddy guy. But that's just reality. You can hammer the Bitcoin message, Bitcoin. If you are not expressed that this thing crypto is snake oil, it is grift, and when I'm talking about Bitcoin, it is only Bitcoin, and helping them
look into the camera,
understand that it is that grift and Bitcoin isn't crypto. And like with the paint stuff, it
wasn't even paint, it's just duct tape.
No, I'm talking about Billy McCusker.
Oh, the paint. Yeah.
Of helping them be like, and like this other stuff is nihilism. Like you don't need two forms of money. They're just trying to get your Bitcoin. That's an important part of the message. Yeah. So
I think we got that through to them. I think because there's so many factors.
It's a new year. Stop doing drugs, kids.
Stop doing drugs.
Bitcoin is not crypto. Crypto is not Bitcoin. There's real signal here.
There is. It was a great way to start the year.
Yeah, glad we did it.
First rip in the saddle.
Good way to accelerate for our own. So like this kind of got me focused for today.
That's why I knew.
Rather than wait till Monday to really re-engage, I was like, no, I'm gonna get some shit done today.
Yeah,
so
we're getting shit done. It's a new year. Militant Marty's here. Parker's going to be on Joe Rogan and Tucker Carlson by the end of the year. You heard it here first. We're going to get Shane Gillis in the studio. Parker's manifesting that for us. Is it going to be great?
Yeah. If Shane Gillis 2025 will be the year that Kyle Bass understands Bitcoin. I feel like some Bitcoiners going to go on Rogan, and we'll get Shane Gillis and Matt McCusker in the TFTC studio. Let's make those three.
Those are pretty humble goals. Humble.
Yeah.
And we'll get to 5%. We're going to get to 5% tipping point too. If we're militant enough, you got to be militant freaks.
I don't know. I feel like if we just get to 2, I'd say it's probably 0.5%. So if we just get to 2%,
double it,
quadruple it. If we're at 0.5%.
Oh, 0.5 to 2.
Yeah. That would be a good goal.
All right. I think we solved everything we needed to accomplish in 2025 here. We just laid it out.
Yeah.
Too much debt, not enough dollars. Nothing to trump.
Yeah, beware of liquidity crisis, okay, guys?
It seems like it's coming. I've got the
you gotta have that
Spidey sense tingling right now.
That head on a swivel. Phil Geiger had a great tweet where he said, he's like, Bitcoin's going to go to 100K. And he had a few other comments. He's like, and then it's going to crash back to 58K gang. So I'm not saying that's going to happen, but
mentally prepare.
Everyone has to mentally prepare. The Fed has been draining dollars out of the system. The amount of debt has continued to go up. If they continue to do that without preemptively digitally creating more dollars, there are consequences to starving a dollar debt denominated system from dollars, and they've been doing that for going on 3 years now.
Leading indicators are screaming right now.
Yeah. But Bitcoin remains the answer in all cases. It will only accelerate the need to print money if they do, but you can't get caught off sides. So survive all weathers.
So you think my super cycle posturing is pretty piss poor?
No, I'm not saying that. I'm just what happens between here and 12 months from now might be particularly volatile.
Be prepared, freaks.
Up and down.
Go buy Gradually Then Suddenly.
Buy the book. Get it for your friends. 20 of them.
We're in the process of writing volume 2 right now as we sit here, so go buy it. Peace and love.